Hello, everybody. Welcome to the Alternative Investing Club. Club dedicated to bringing you every single Friday at noon Pacific time, different operators with different passive income strategies. We're going to be waiting just about 5 minutes as people start to join. I see that people are starting to join already. Good. And we'll give a few announcements also while we're here. Let me pull up my announcements. And because you guys all know that I'm a geek at heart, I'm going to show you not only my announcements, but the HTML screen that I use to write them up. All right. We're going to wait a few minutes as people join. If you are joining for the first time, please put your name down in the comments so we can say hello. Put your name and where you're from. And actually, since this is a webinar style now and no longer Zoom, where we can all kind of just sit here and talk to each other for 5 minutes, which was always nice. Since we can't do that, go ahead and put your name and where you're from in the chat. And that's kind of our way of saying hi to each other now. James, good to see you. The reminder email from StreamYard was a replay of last week. What? The one that was sent out today? Wait a moment. Clicking here. I'm going to test it right here. Can you confirm that? Can anybody else confirm that for me? Hi, Manjo from the Bay Area. Are you from San Jose, Intel? Yesterday, March 20th. Okay. I didn't send one out yesterday. I did send out an announcement about our fund. Okay. Oh, can you confirm, was the correct link given in the email that was sent out to everybody today? I've got a report that there was a wrong link in one of the emails. Hello, Ain from Eagle. I saw you got my updates on the oil wells. Okay, other people are saying it was correct. Hello, Sean from SoCal. That's interesting. There's not an Intel plant down in SoCal. Are you from Intel, Sean? All right, Anita, always here every time. Good to see you, Anita. Hey, Anita, if you ever want to be a speaker again, we can get you in here. I know sometimes the club members that come in and give talks, it takes a lot of guts. And that invitation's open to actually any club member that wants to come and talk about whatever you're investing in, the project you've got going on. We did have a club discussion that was scheduled for next week, but I actually got a really good sponsor who could only present next week. So I'm actually canceling the club's discussion for next week, and we're putting in a sponsor who works in luxury garage storage. And some of you may know them. They're the ones that run the Best Ever Conference. The people that run the Best Ever Conference. All right. Looks like we're getting just north of 40. We might wait a little bit longer here. Yeah, I need to come, email me, hit me up with a topic. I love bringing you in. And that goes for anybody out there in the club who wants to present on a topic. Rob, good to see you. Prolette, the ever-present. Lol, I was just presenting, just went to a presentation forum with them today. Prolette, I was actually on that same call. So I saw the presentation they're going to be giving next week. Stella from California. Welcome, everybody. All right. I'm going to share my screen here really quickly and I have only one announcement currently. So the announcement currently is that this club is dedicated not only to bringing in great operators that show what they're doing every single week, which is what we have this week. We're also dedicated to finding the best operators and putting them inside our club fund, and then giving people inside the club a voice as to how much we allocate into each of those different operators. And so I want to make clear to people, I keep getting this question over and over, when you put money into the club fund and you say which operator you want it to go with, that is a preference mark for me. To say, oh, okay, they want it to go into, and the three we have currently are the debt validation fund, which, by the way, I have some due diligence updates to show with you. My concerns with the debt validation funds have been quelled. So previously there was a lawyer who embezzled from them, and that lawyer is gone, and the way in which payments are done are not run through the law office anymore. So that's the real short of it. But we have the debt validation fund, which helps first responders and veterans consolidate their medical debt. We have the investing in commercial aviation assets, which purchases airline equipment and airline engines and leases them back to the airline industry. And we have LaCreme Properties, who works on building factory-built homes and installing them on site in Austin, Texas. So these are the first three longer-term deals that we're putting inside our fund. Currently, the money that's in the fund is allocated to DLP's lending fund, 78% allocated in a debt fund, and that's basically coming through and just paying the pref to people that are currently invested. 22% is invested in 30-day T-bills, and when we get some more votes on which of these funds people want to see it in, so each time you contribute, you can say your preference as to which one it goes to. And if it makes, if there's no other reason the fund needs to put it elsewhere, I will put it in that spot. There might be situations where, the fund is a 3-year hold and everybody's marking that they want the 7-year project to be in there. Well, I need to maintain liquidity. So there might be reasons to put it in other directions. But whenever you invest in the fund, I want to hear your preference for where it goes. And that way the club has a voice in how much is allocated into each one. And the fund reflects the club. So if you're interested in that, you can click here. I'll drop the link in the chat. And this is just a Google sheet to let me know your interest. And I'll follow up with the legal papers and the one-pagers. That's the only thing that I have to announce today. If you have anything that you want to state, please say so in the chat. And for our group here at Fraley, let me introduce them. We have Kyle and Mark from Fraley. They're involved in one of my favorite states for investing in, and that's Idaho. And so we're going to hear from them on their strategy for investing in Idaho. And I hope that you will give them lots of questions as well. Kyle and Mark, I'll moderate the questions. So as questions come in, I'll mark them. And then as we come to strategic spots in your talk, we can interrupt and ask those questions. Or if you want, we can hold them all to the end. It's up to you. So just to let you know, I want you to concentrate on your speech.
Anytime.
All right. I will turn it over to Kyle and Mark. Welcome to the group, Fraley Investing in Idaho.
And, Daniel, thanks for hosting us today. It's great to be here and everyone joining. We appreciate you taking Friday. As Daniel mentioned, I'm Kyle Barnes, VP of Capital Markets at Fraley Development, joined by our CEO and principal, Mark Russell. Before we get started, I'll just run through a few disclaimers, then I'll pass it over to Mark to dive into the presentation. And as Mark mentioned, feel free to jump in with any questions at any time. The more conversational and relevant we can make the discussion for you, the better. So without further ado, this presentation is for informational purposes only, should not be construed as investment advice, an offer to sell, or the solicitation to purchase securities. We're not attorneys, CPAs, or financial advisors. The views expressed here do not reflect those of the Alternative Investing Club. Any forward-looking statements, financial projections, or hypothetical scenarios included are inherently uncertain and subject to change. Real estate investments carry substantial risks, including market fluctuations, property-specific challenges, environmental factors, and the potential for loss of capital. The opportunities discussed are not FDIC insured, do not represent bank deposits, and are not guaranteed by Fraley or the Alternative Investment Club. The content of this presentation is intended to provide general information regarding investment opportunities in the Boise market and Fraley's approach and strategy. It is not intended as a direct solicitation or offer for any specific investment. Past performance is not indicative of future results. So with that covered,
hey, Kyle, may I say the same thing here as well? I always forget to do this. The Alternative Investing Club is not a registered investment advisor. We're not CPAs nor lawyers. We're investors that are talking to other investors, and we don't give any professional advice or endorse any particular investment over another. So there's the alternative investing club's disclaimer as well. Floor's yours.
Beautiful. Take it away, Mark.
Great. Yes. Thank you, Daniel, for the opportunity to address your group here. And just a little bit about Fraley, just so you guys know, I have a diversified, entrepreneurial background. I have worked in real estate for around almost 30 years in a variety of different states, Mississippi, Alabama, Georgia, Idaho, Oregon, and Washington. And that's probably because I'm originally from the southeast of the U.S. And we have worked across all asset classes. But in 2017, my wife, Laurie, founded Fraley. And we founded Fraley because we were living in Boise, Idaho. And we had had observed that we had low inventory and had increasing prices. And so she wanted to create a real estate company that was based on the motto that everyone deserves a home. And so we have really focused on developing residential communities that are at market attainable prices. And so that's the founding of Fraley in particular. And just for whatever it's worth, the name Fraley comes from our personal family story, in that we were trying to come up with a name that was unique and different. And 20 years ago, our son had a pet crab, and he came to me and he asked me, "What's the name of our pet crab, of his pet crab?" And I said, "Well, it's your pet, so you can name him whatever you want." And so without missing a beat, he said his name is Fraley. And so I kind of sat there and thought, well, what is he? Where did he get that name? So I asked him, "Where did you get the name Fraley?" And he said, "Well, that's because it's his name." So flash forward, that was like 2002. Flash forward to 2017 when we were trying to figure out the name for this new company. That popped into my head, and I searched Google, and there was absolutely zero record of the word Fraley. So Fraley comes from our son's hermit crab. But we like it because crabs are like what we think homes are. A crab is essentially a home. It has a very durable exterior and a very tender interior. And so that's the kind of homes that we want to create. And so that's the word Fraley comes from. And so we can move forward a little bit from that. That's Fraley's story. So we are currently now, focused on our residential. We still do some development across different asset classes, but all of our work that we're focused on now is at what we'd call market attainable for sale residences. And we do manage the entire process from beginning in, take vacant land, take it through the approval and entitlement process, and get it approved and managed through the construction process as well. So that's just Laurie and me. You guys can read about us a little bit more if you want to. And so flowing from our background is, and Fraley in particular, is definitely very connected to the Idaho market. And our particular strategy here is very much defined around what is going on in Idaho. So when we started this company in 2017, as I mentioned, we were at the time concerned about market attainability because prices were beginning to go up. And so just for a brief history, in 2008, we had the great financial crisis, Great Recession, driven by a surplus of inventory. And Idaho had very little development from 2008 to maybe 2013, and just a little bit of started building. So by 2017, we had hit this crisis of lack of inventory and thought we were at that time at pretty high prices. So since from 2017 to 2022, 6 years in a row, Idaho was the fastest growing state in the United States on a per capita basis. So that's year over year over year, we were getting more people coming in than on a per capita basis than any other state in the union. So that 6-year drive continued to amplify and magnify the challenge that we had already seen previously, which was, low inventory and escalating prices. All of that to say, we have gone through the entitlement and approval process of probably around 20 different subdivisions. Because of escalating prices, we continue to work all of these neighborhoods to where they could be a build for rent neighborhood or build for sale. And consistently across the board, they have all gone as build for sale. And the reason is Idahoans and the people who come to Idaho greatly value owning a home as opposed to renting. Therefore, they pay a premium for that. So the premium goes to the for sale product. So we've always been well positioned to manage rental projects, but actually have not done very much of that in Idaho because we continue to see the market pay the higher prices, essentially. And just for whatever it's worth, we definitely believe the migration into Idaho will continue for a very long period. And it will continue to have the same impact of the sense of low inventory market conditions. And this is going to be predominantly driven by the West Coast, predominantly California. So if you see California is very close to 40 million people, Idaho has crossed over 2 million. If 1 million people get up and leave California, California doesn't really notice, but Idaho is, more or less overwhelmed. And that's essentially the situation that we have, which is that we continue to have an influx of people that sort of surpasses the capacity of people inside Idaho to meet that. And so that's what we're focused on, is meeting that continued increased inventory need and delivering a product that is at a price point, although it continues to escalate, at a price point that is around the median price. And as you see, Kyle's shifted to the Boise market overview. There's a couple of factors that drive the migration into Idaho. Part of it is that it's less populated, and it has historically also been driven by affordability or lower pricing, lower cost of living. Now, the lower cost of living issue is coming up, but we continue to see year in and year out. Boise is just always on these top 10 places to live. Last year it was number 2 in the U.S. News and World Report. Livability indexes always have us near the top. We have dozens and dozens and dozens of articles that point to that, and you probably will have seen it. So we continue to see it as a highly desirable place to live. We have great mountains. We have great access to the outdoors. People are kind for the most part, and it's a very warm atmosphere. And I've lived in 6 different countries and 6 different states, and I could say there's a reason I've spent the last 17 years in Idaho, and it's that it's a great place to live. So that's all driving part of the reason why we think the migratory patterns to Idaho will continue in such a way that very much benefits new construction, and particularly new construction at attainable pricing. And so this leads into our particular strategy, which I've sort of recapped, but just to kind of drill down here, we have done around 20 neighborhoods in Idaho. We have about 3 that are coming up soon, and all of those we have continued to focus on the desirable location within the Boise submarket. And so Idaho land, developable land is a little bit more difficult to get than you could imagine. And generally it tends to lead to a very spread out sort of sprawl sort of effect. And so we're trying to reverse that and realize that desirability for a lot of people in Idaho is based upon having a home in a central location to cut down on the commutes that they're attempting to flee in other states. And so we're really focused on premium locations and delivering a new construction product at a affordable price and in a location that creates this sort of livability and quality of life that people are looking for, ability to walk to restaurants or ride their bike along the river and those types of things. The other thing as part of our strategy is we do select and find the land typically off market and typically vacant without any sort of approvals. And then we manage the entire design of the neighborhood to get it to what we believe is the right product to sell effectively in align with our overall mission.
And I'll just set the stage a bit before breaking down what I think, really sets Fraley apart. Before I joined Mark and the Fraley team last year, I spent 9 years at Realty Mogul, where I had the chance to evaluate a lot of sponsors, business plans, and asset classes. I've seen projects outperform expectations. I've also seen a few underperform. And, one thing I've learned is that, everyone does their best when building budgets and pro formas, right? We all try to anticipate and forecast what's most likely to happen. But as we know, unexpected challenges arise. And that's when you really get to know your partner in the more turbulent markets, how they asset manage, how they communicate, how they adapt to change. And those that do that well are able to execute more consistently. And from my experience, the projects that tend to perform best are the ones where the sponsor has a meaningful equity investment alongside their investors. These projects often are in asset classes where sponsor has muscle memory. In other words, they've successfully repeated or executed a similar business plan over time. And, projects where sponsors are closely involved and actively oversee the implementation of the business plan tend to do better. And I bring this up because, not all return projections are created equal. And that's why, it's important to evaluate returns on a risk-adjusted basis. But just as importantly, it's essential to get to know the companies you're working with, understanding their history, experience, and values, in addition to their investment thesis, especially, when you're choosing who to partner with and invest alongside, potentially for the long term. So, with that framework in mind, I think Fraley as a business and steward of capital does these things well. There's a strong alignment and commitment with investors. Skin in the game or a meaningful equity stake tends to create that alignment and accountability, which is a key factor or driver in success. We generally like to bring in outside capital once a project is fully entitled, so has received the necessary city approvals and when horizontal work is ready to kick off. So this helps avoid delays and mitigate some of the execution risk involved. In terms of oversight, being based in Boise is a huge advantage for Mark and other local team members. It allows them to closely monitor progress, making sure that, we're using labor and capital efficiently throughout the process. And because of the local footprint, our team can better anticipate challenges and also uncover unique opportunities through relationships, which ultimately can lead to better investments and stronger outcomes. Risk mitigation through cost controls. So with rising tariffs and supply chain issues top of mind and affecting the industry, we look to partially mitigate this risk by locking in contracts with reputable general contractors that put a ceiling on key construction costs. So this gives us a more predictable cost structure and limits exposure to price fluctuations, which is obviously crucial in our business. And, while supply constraints present a challenge, they also can create an opportunity. So if, construction and labor costs continue to rise, breaking ground on new projects becomes more difficult, and existing homeowners, stay put due to higher interest rates. The resulting supply tightening can ultimately boost demand, leading to stronger pricing and higher exit values for projects already underway. So that's a tailwind or a crosswind, we're looking to harness with existing projects.
Yeah, thanks, Kyle. And I do think I would, just to reiterate what Kyle said, that has been our experience in the past, is that, when we have good manage and control, even increased cost has served to help to keep inventory low, which has created, a seller favorability when it comes to the supply demand issue. And that's what has continued to happen for, 8 years running in Idaho. And here, just on the slide, we have one sort of example of a historical project that we had, which would probably be sort of for lack of a better way of saying it, sort of a median project for us in the terms of it's the sort of middle-sized, and it was in a really nice the submarket of Meridian, which is one of the great fastest growing towns in the country. And it was a 29 townhome subdivision. Again, this was also one of these situations where the land was found, purchased as vacant, taken through the entitlement approval process, and through the horizontal and vertical construction, and then sold off to individual homeowners. And so it was a 29 unit project. It took us actually a good bit between about 30-ish months from initial contract to completion. And it was a very successful project that went through the heart, by the way, the heart of COVID, with many delays along the way, but still got it done in a very rapid fire process. And this is just some samples of the townhomes and the finishes that we used on that particular project. And feel free if anyone has any particular questions on that. You get some interiors there, and then we could move along to maybe, I don't know, Kyle, if you wanted to kind of talk through the sort of the hypothetical example we have there or anything.
Yes. So what I'm about to share here is just a hypothetical example of kind of what a typical deal might look like for us. We do have a pipeline of projects where this profile is fairly representative of the types of deals we structure and pursue. But just to kind of run through high level characteristics here, there's typically an equity requirement of, call it 1 to 10 million per project, depending on leverage. Target hold period typically between 2 and 3 years. That reflects the timeline from acquisition and development until the last home is sold. Project size tends to be 10 or more homes, depending on site location, taking into consideration financial, regulatory, and market factors. So a little bit of scale there, but certainly sub-institutional, more middle market product. On our Boise projects today, we typically aim for leverage between 75 and 85% LTC. So just depending on the risk appetite and target returns desired by our partners. And on target returns, we typically underwrite to an LPIRR of 20% or higher, usually mid-20s, which we feel is commensurate with the development risk, and a minimum multiple on invested capital of call it 1.3 times or better. And these are obviously impacted by a variety of factors, including leverage, basis, exit values, hold period. But this gives you a sense of what we're targeting. In terms of hypothetical deal structure and fees, also project dependent, but our waterfalls are structured to prioritize investor returns before sponsor receives any carried interest or promote. So we effectively make money when you make money, and this ensures that we're all aligned and driving the best possible outcome for the project. In the past, we've offered a waterfall structure with 8% preferred return followed by an 80-20 split, where 80% goes to limited partners and 20% is allocated as carried interest to the general partner. And the company earns development and loan guarantee fees if applicable. So these are pretty straightforward. The loan guarantee fee is paid at closing, while the development fee is typically paid out over time. And I think it's also noteworthy to mention that, Fraley typically contributes land we already own at our cost basis. So without, additional premium or markup, and we typically don't charge acquisition fees or ongoing asset management fees. In our experience, we believe these terms are pretty competitive and demonstrate our strong alignment with partners and, ultimately confidence in the success of each project. So, yeah, with that, I mean, as Mark said, we're actively pursuing opportunities in the Boise market. Would love to connect with anyone interested in learning more about our approach and strategy. Obviously welcome.
It sounds like there's one investor here who definitely wants to take a hands-on approach. Ain is asking here, is Riva Capri at Black Cat and McMillan intersection? I'll go check it out.
Yes, that's quite impressive that you were to spill that out so quickly. Yes, go check it out. Now they've all been sold, just so you know, to homeowners. So there's no, I don't know what the word is. You can't tour any properties. I did look up this past week. There are a couple that are listed for rent. So you might could get in as a, on a rental analysis or look. But yeah, and that one was built by, and just so you know, also just to clarify, we do, we work with general contractors and builders on different projects. And that one was with Berkeley Homes.
How often do you guys have new projects that investors can participate in? What's your frequency for?
All the time.
All the time. Okay.
No. So yeah, I think on a so we at least would have 3 a year.
Okay.
Yeah, that's sort of the probably appropriate pace.
All right. Do we have any questions here? I know Ain is in the Idaho area, but anybody out of state California. I'm a Californian and I can't say that. Anybody from out of state that would like to hear or ask any questions about Idaho here? It's been a little quieter than normal. So I know you guys are out there. I want to ask a little bit more about Boise over the last couple of years, particularly since the pandemic, has definitely had a rise in population and in rental prices. Do you see that rise continuing? Is it flattening out? What's your perspective on the overall market in terms of maybe a longer term perspective?
Yes, longer term, definitely there is going to continue to be rental escalation and home price for sale increase. And what we have seen historically over in Idaho is that we see that we kind of hit a pause or a plateau at times as people start to resist, and then it kind of breaks through. And I would say last year was definitely a generalized pause in the sense of like there wasn't a lot of escalation, things kind of flatlined. And again, this is talking about rents and for sale pricing. But we've actually seen 2025 actually has had a dramatic kind of like quickening of the pace, particularly in the for sale market and things going. So I think in what we've seen in the past, you kind of have this pause and then it kind of breaks through and it goes again. And so what we had in Idaho also is on the rents, again, like I said, the rents have tended to be to go below. So you have the rental price here and the home price here. It's always higher, but they continue to kind of go up in similar fashion. We had the rents last year kind of plateau. And some of that was of concerns that maybe there was, too much kind of flooding the market. I don't really think that's the case with rents. I just think it's a market sort of plateau with all of the macroeconomic stuff going on. So long term, I would think a build for rent or rental community would do very well. But I do think you have to have a 5 to 10 year horizon because you have to be able to be willing to get through this sort of time period. So that's sort of like if you had in a tranche of money that you were willing to put over to that would work well. Ours, as we kind of explained here, are designed for much quicker turns. So we're looking like 2 to 3 years and for sale. And part of that is because they just work better. They just financially perform higher. And you just have less sort of like long-term macro risk that you would have at a rental community.
All right. We're starting to get some questions. Oh, go ahead.
Oh yeah, I was saying just to jump in on kind of the cost to own versus renting in Boise. It's cheaper to rent on average than purchase, particularly where interest rates are. But the dynamics are different in every market. And one of the earlier slides, highlighted the median days on market being around 37 days and months of inventory being around 3.3 months. And those are really favorable metrics if you're a seller. And the driving force behind those numbers is population growth and comes back to the fundamentals that Mark kind of described around kind of a diverse and growing economy. And the city of Boise also published a housing needs analysis report last year. And one of the key takeaways is that housing construction has just simply not kept pace with population growth. And it's kind of goes hand in hand, apartments and homes. And demand, while the pace of permitting looked encouraging last year, there's just not enough product actually coming out of the ground being built, particularly on the more affordable side of the spectrum, which is why we've really focused in on this attached townhome product, because it's affordable, but still brings those elements of luxury that, new homeowners are interested in.
All right. I'm not sure if this is on topic or not, but Jake wants to know about the skiing near Boise.
Yes.
You guys have a favorite spot?
There's great skiing in Boise. There's a resort called Bogus Basin Ski Resort, which you can look up. It's about a 30-minute drive from downtown Boise. I don't know if it still is, but it was considered the most affordable ski area in the United States. And it's one of the few that also has night skiing. So we have very affordable, and it has snowmaking, by the way. So, if snow is inconsistent, they can make the snow. So that's within Boise. Now there's a lot in Idaho that's going to take you a 2 to 3 hour drive, world-class resort like Sun Valley. Tamarack is another ski resort, about 1 hour and 30 minutes from Eagle. Brundage. So you have a lot of at-home options in Bogus, or you have that option, and then you have multiple options for weekend skiing.
Yeah, I know around Portland, Oregon, Mount Hood is a really popular destination for skiers in this area.
Well, and for anyone who, I lived in Portland for a short period of time, by the way, and I would say the biggest difference between Mount Hood and Bogus Basin is the sheer number of people trying to get there on the weekend, which made it a very huge effort. Whereas at Bogus Basin, it's really surprising. You can just drive up there and be on the lift in 45 minutes and skiing. So,
all right, we've got about 7 questions in the queue here. And Leah is asking, I saw on one of the PowerPoints that the median home prices are around $500K. At that price, are we still making money on rentals?
So, yeah, the median price in the Boise area is now around $530,000. And we have our projects based upon where they are, the cost and the price to sell, still have very good margins. In terms of long-term rentals, that kind of comes down to what the investor interest is, because there's a whole different metric kind of introduced when you start to look at rentals. But that is part of the reason why, one of our core values is to be flexible. And so we keep our real estate development company, really adjusting and adapting to whatever the market is sort of asking for. And as I mentioned earlier, we've essentially set up each one of these subdivisions so that it could be pivoted into a rental neighborhood or a for sale neighborhood. But it continually is more advantageous from an investor financial standpoint to do it on a for sale basis. So as a rental basis, if someone has a really good 5 to 10 year hold period, and that's their goal, a rental, built for rent neighborhood would work, but it's going to take patience and time.
Okay.
Yeah.
James W. is asking about the surging number of permits that are in the area, and if you had any thoughts around your strategy in a market such as that. Single family home permits.
Yeah, I would say I would say we do not have anywhere near the actual construction starts to be a concern in terms of inventory. So when you have permits surging, your concern is, I was saying we're going to flood the market and we're going to have excess inventory and it's going to take longer to sell and you're going to sell at a lower price. But the reality is we don't see any of that. We had a very, I would say, high amount, if you would, of the sort of entitled land. And if all of those were built out, then you might start to have an issue. But the construction starts are way low, actually. I mean, they're still very low compared to what the market is needing. So we continue to have inventory is continually in on the seller side. So we don't believe that the permitting is an indication of a coming oversupply. And partly that's because we also have other limiting factors in terms of labor and supply and capacity for people to build. So we monitor this very closely because that's our key. That's one of our key issues is what's everyone else doing. And I would say there's been nothing come along that's concerning.
Okay. All right. Next question is from I think Manjo. We've answered your question on the idea on giving you an idea of what the rents are, and Ain also commented in the chat as well on that. So the next question is going to go to Drew. Does most of your development fall into the Greenfield or urban infill category? That example development seemed fairly far from the city center.
Yeah, that's a very good point, Drew. That example was along a corridor that's sort of a fast growing, but far from the city center of Boise. It was in one of the sort of growing areas of one of the submarkets. And historically, just so you know, we have essentially developed in almost every municipality in the Boise in the Boise metro area, Meridian, Nampa, Caldwell, Kuna, Emmett. So we've kind of done it all. Our current strategy is, though, very much focused on urban infill. And that's partly because we have been able to find the locations, which are very difficult to find. I'd say there's not that many remaining locations for urban infill in the way that we like to do it. But we've been able to find some locations. And also, construction costs are the same, regardless of where you are. And the infill central locations, you will get a higher sales price because there's greater demand and less inventory. And so that's the definite preferred approach is urban infill because of that reality. But that's not the only approach. But that is our current focus, and that's what our future, the next two projects we do, that's what they will be.
All right, I'm going to jump down the list a little ways here because this person, SS, just wants you to switch back to your hypothetical investment page so we can take a look at the numbers again. And I'll take the question off so you can see them there. Got Drew's question. Oh, there's several questions about the job market and the economy in Boise, and specifically, how's the job? Fang is asking, how's the job market there? Enough to support the population growth? And then there was another question a little further down, and I'm missing it at the moment, so I apologize to who said it, but asking who the major employers were.
Yeah, that's good. That's very related questions. I would say, one, Idaho has benefited, I would say, tremendously from the work from home trend that happened. But actually, that's had less of an impact than, as we've analyzed it, that's actually had less of an impact than we would have thought. Because I was sort of like, where are all these people doing? So the two things that we do have, though, with people moving in, one is we do have a lot of people who are essentially retiring and selling property in California and moving to Idaho. So we have a lot of people coming in who are bringing the money they need with them, essentially. That's one. And two, we do have the work from home environment. But three, we do have a very strong economy. One of the main employers is Micron, which is a chip manufacturer. They have a $15 billion development going on right now. And that's been one of the big drivers. We also have Albertsons is based here. But the economy is actually pretty strong. If you do look at it, sometimes on some of the median salary to the cost of living, you would think we're starting to get a little bit high. But what we've continued to observe is that differential is significantly lower than it is in California and Denver and Utah, meaning Salt Lake City and Denver, Colorado. So which are the kind of chief alternatives to living in Boise. And so we believe that, and I would say California is the best example of showing how people adjust to rising home prices. They just do. They don't know how they make it, but they do. And so we're still a long way from those kind of numbers. But we do have strong economy. You know, we have the Boise State University, which is a very dynamic university that produces a lot of that. So Boise is it's a vibrant community, very vibrant.
Okay, Rob, and you can probably move the slides back over to your contact information for people. Rob, oh, and I see you just accidentally stopped sharing. Go ahead and share it, and then I'll put it through again. Yeah. Rob is asking, do investors get a discount for pre-buying?
Oh, that's a great question. So one is, we have done that in the past. It has been on deals where we had fewer investors. So it was kind of easy to work out with essentially all the investors and just go to all the investors like, hey, we're going to do this option, for everybody, and everyone just join in, and you can roll in your equity, do whatever you want. We do have one that we're working on right now where we've had like 4 say they want to do that. The one thing I would say in general is, of course, anything that we do, it can't be it. All the investors have to have the opportunity, and it has to be fair to all the investors. That's number one. And then number 2 is there are a lot of reductions, though, or discount opportunities that actually benefit everybody. And so one is, I think the question mentioned pre-buying. So in all developments, you pretty much start at a low price point and then drive it up as you sell through the product. So, I mean, we've seen that range, start at 400 and end at 500, for an example. So, I mean, you can see that escalate 10 to 20% as it goes. And then the second is having pre-sold product helps because we can list that, market that, promote that. So, and you also have commissions are a significant, cost factor. So what we've done in the past and would be love to do in the future is make an offer to all investors early and say, hey, if you pre-buy, we're going to give you the lowest price, and we intend to drive it up continually. We'll remove the commissions. I mean, unless the investor for some reason wanted to use a realtor, which I wouldn't recommend, we can remove those commissions, and then you actually end up with a significant discount, a way significant discount compared to what people buy later, but even a discount over what some of the early buyers would be.
All right. Next question goes to Manjo. He's asking, instead of investing in the project, is it possible to invest in buying a home and recapping the same ROI when the home is delivered as investing? So I guess he's asking, will you let individual investors buy homes?
Well, and that's sort of there's 2 ways that could be done. And that goes back to the comment I just said, which is essentially you can put your money in, say, hey, I want to have mine, labeled for property. We're going to roll it over and we're going to invest it. The only other opportunity for that, if you said, instead of, this is more like, I don't want to invest in a project, I just want to buy a home, is you could essentially be a, early buyer of a home, put down a down payment that you would release in exchange for, a discounted price. So there is an angle there. I think the cleanest is probably just to invest and use that money and get the ROI on the return and roll that into the purchase. But that's what I would say. But I mean, we're very flexible. So if anyone's very interested in this, definitely just connect with us, and we'll work to see if we find something work. But that is I would say it's a very common thing that people are wanting to do. So we are working on if there's another solution beyond what we've done in the past.
Anita is, I believe she's from California, but and so she's asking, what does the home affordability look like for the average person in Idaho? Yeah, can you comment on that? And Ann also has a comment on that in the chat as well.
Yeah, so then that's that's part of the reason we've structured this strategy to be very focused on the ability of homeowners to make these purchases, and be able to afford them. And so that's why we've designed the product the way we've had, which a lot of it is very attached townhomes. And what we see in Boise in particular is we see people who are trying to enter the home buyer market tend to be younger people. And we also see people who are living on their own, maybe later in life, and it either can be driven by, the passing away of someone they've been living with or a divorce. So we see a lot of divorce people who are kind of or entering the home market on their own. And we want to deliver these homes at a price point that a 35-year-old millennial couple or a 59-year-old single person can afford. And so that's what we've done. I would say it's never been an issue, but again, that is exactly the point we continue to watch is, are we going to hit a ceiling of affordability or the ability for people to afford it? We haven't, and we feel like there's a long runway because of essentially the case studies of Denver, Salt Lake, and California have proven that people can't afford homes at a higher expense ratio than ours.
All right. I think that's all the questions that we have currently. If you have a last minute question, be sure to put it in the chat here. Otherwise, I wish we were still on Zoom where we could have everybody take themselves off mute and say thank you. So instead, we're just going to put it in the chat. Can you thank Kyle and Mark from Fraley for reaching out to us today? And of course, there's their contact information as well. Feel free to reach out to them directly. And I know that there they go. I noticed that on some of the social media platforms, it's like 10 seconds behind live. And so sometimes when I say that, I go, oh no, nobody's going to say thank you. and then they start coming.
Well, I want to say thank you. So thank you to everyone for spending their hour here on a Friday afternoon for us. And I hope we hear from more people, and feel free to contact Mark at fraleydevelopment.com or Kyle at fraleydevelopment.com.
All right.
Yeah.
Guys, thank you for
us,
coming
Daniel.
in here. Thank you. Next week, we're going to hear about luxury garages. And so we hope you will join us next week at the Alternative Investing Club. Talk to you guys later.
Thanks.